I have for you, but we got to continue this conversation, and we'll do that. And we hope to see you tomorrow. But I want to bring in Alexia Quadrani. She's the media analyst at J.P. Morgan. Also, Mike Santoli this morning, senior markets commentator, also joining us. Alexia, my question to you is: you look at the experience in Shanghai. What does that say to you about what you think is coming here to the United States?
Oh, I think it's a great blueprint for what's going to happen here in the U.S. I mean, we put in our notes that we expect an opening potentially on July 1st for the domestic parks. If you look at what happened in Shanghai, they opened up the stores and the restaurants kind of in March, and now you're seeing the official park open up in full. And that's what we're seeing here in the U.S. We've seen the early sign of it in the sense that they've announced that Disney Springs in Orlando, which is the stores and some of the restaurants, are going to be opening up later this month. And I think that's the first step to seeing kind of a recovery or full opening here at Disney World. I think Disneyland might take a little longer just given the politics of the two different states. But I do think it's a very positive sign for reopening here in the U.S.
And then to the degree that you can make projections about what traffic looks like at a place like Disney World in the next 6 months, how do you even begin to estimate it? Is it 30%? Is it 50%? Is it 75%? And who are you talking to try to make those estimates?
Well, we've seen a bunch of different data. You know, I think Orange County in California, for example, in their group meeting to try to figure out how this can work, they put out their 50% capacity at opening. And I know there's been a council also in Florida that's been looking into it as well. And they've suggested different data points like that as well. I think Disney will do the right thing. And just like they're doing in Shanghai, they'll look at what the government mandates or the government suggests, I should say. And then they'll probably open a little bit less than that. And then after that, you know, they'll kind of build up slowly, assuming that it's working out well.
Hey, Mike, what does this say, though, about the larger picture for business, for getting back to work? It's so interesting because you do look at these polls and there's so many people, majority of the country, saying that they think we're moving too fast in large part. And yet then you look at a lot of anecdotal evidence, whether it's what's happening in Shanghai or frankly even going to shops right here in the United States over the weekend. And it does feel like a lot of people are out and about.
For sure. I mean, I think that, you know, from the market's perspective, the direction is toward more incremental reopening, even if it's slow. So if you look back, you know, I think a month ago, it was kind of pretty much a very kind of a black hole in terms of figuring that out. Now you have kind of progressive incremental reopening. And the market, I think, has seized on those dynamics and basically said, oh, you've probably seen the worst in terms of lockdown. I don't think yet, though, the market is trying to get ahead of exactly where the public is or where business is in terms of saying that this is going to be back to normal anytime soon. I mean, even though the overall S&P 500 is down only less than 14% from a high, if I look at the kinds of things that would represent a back to normal type economy, you know, whether it is Disney stock down by a third, airlines down 70%, casual restaurants down by half. I mean, all that stuff is still showing you it's going to be fits and starts. Maybe we're going to have to dial it back once it opens up. Nobody's sure about what the consumer appetite is going to be for these things. So I think that it's a mixed picture, but increasingly investors are looking toward how it might work rather than how it might fail. And I think very crucially, if you're betting that we're going to reopen in certain phases and maybe it's going to be okay, you're not going to be proven wrong for a while. So the kind of the bull case is hard to disprove until you try it.
Right. Hey, Alexia, a quick question. If the park is operating at a third of its capacity, what does that mean for profitability for Disney? And I'd ask the same question of Universal Studios, which is also closed right now.
I think it doesn't matter if it starts slow. I think, you know, we asked this question on the earnings call, like what kind of capacity do you have to be at in order to resume profitability? And I think, you know, Bob Chapek had a very strong answer to it, which is it's not about, you know, levels of capacity. It's about beginning to cover the cost. You know, the Disney World and Disneyland is losing a lot of money. We estimate close to $800 million per month being closed. And so if they can bring back the cost slowly, you know, not bring it to full capacity because in terms of the cost basis, because you're not going to have full capacity in terms of the visitors, and bring back the variable cost slowly and then bring visitors into the park even at a lower level, you're still going to start covering the cost. And I think that's what's really important here. And then just like you guys said, it's like it's not about going back to normal right away. I think it's about baby steps and setting a path to normal, and that's what gets the stock going.
Is Disney World different than Disney World Shanghai? And the reason I ask that question is because Disney World, I've always been under the assumption, typically a majority of the people going to it are traveling. They're getting on airplanes, they're flying to Orlando. Shanghai may be very, very different. And the question is, do people get on airplanes? Are the hotels therefore full? What does that look like? Or are we looking at a very different picture this time?
I think there's no question that Disney World has more people come, from airplanes and for further distances. Although Shanghai does too. It's not Shanghai, it's Disneyland. It's not all locals. They come from all over China and even some from outside of China itself. But yes, Disney World has a higher concentration of folks that would have to get on a plane. That doesn't mean it can't, see very strong demand, even if it opens at 25, 30, 35%. We saw how Shanghai Disney sold out within hours, right, for the first few days. I think you're going to see a lot of pent-up demand here, and I think you can find people that will drive long distances to go to Disney World, and therefore I think it's still going to be a positive, even if it opens up a limited capacity.